Is Bitcoin about to skyrocket back to $70,000? With the Federal Reserve poised to make a major interest rate cut, the crypto world is buzzing. Will the move send Bitcoin soaring, or are we in for another dip? In this video, we'll break down the key factors driving Bitcoin's potential rally, including crucial technical indicators, market sentiment, and expert predictions. Stay tuned for a deep dive into the data and insights you need to navigate the volatile world of crypto, especially as the Fed's decision looms. Hey, I am Crypto Billy, the GOAT. Let's start our video with a motivational quote. The greatest glory in living lies not in never falling, but in rising every time we fall. Nelson Mandela. In crypto, persistence is key. Success comes from learning and bouncing back from setbacks. Now let's get a snapshot of the current market. The Crypto Fear and Greed Index is currently at 33, indicating fear, which can often signal potential opportunities for those willing to take a calculated risk. The total crypto market cap stands at $2.05 trillion, showing that despite recent fluctuations, there's still significant market interest. As for the big players, Bitcoin is currently priced at $58,765 and Ethereum at $2,310.47. Bitcoin, despite its recent volatility, is holding strong above key support levels, and Ethereum too shows potential for recovery as the market navigates this period of uncertainty. So, what does this all mean for Bitcoin's future? Today, we'll explore how the anticipated Federal Reserve rate cuts could act as a catalyst for the next big Bitcoin rally. We'll also dive into the technical indicators pointing to a bullish momentum and analyze whether Bitcoin's recent dip to $58,000 could be the perfect setup for a breakout back to $70,000. 1. Fed rate cuts and Bitcoin's rally, a strong correlation. Historically, Bitcoin has demonstrated a positive correlation with Federal Reserve rate cuts. When the Fed eases monetary policy by reducing interest rates, it often signals a more favorable environment for risk assets like cryptocurrencies. As of now, the upcoming Federal Open Market Committee, FOMC, meeting has the market buzzing, with the CME FedWatch data showing a 63% chance of a 50 basis point rate cut. This expectation is key to understanding why Bitcoin has rallied in anticipation. Why does this matter? Rate cuts generally lower the cost of borrowing, making it easier for investors to deploy capital into assets that offer higher returns. With inflation cooling and the Fed stepping back, Bitcoin stands to benefit from the influx of capital looking for alternative stores of value. Since Bitcoin has limited supply and increasing demand, this could accelerate its climb back to $70,000. The best way to predict your future is to create it. Abraham Lincoln. Investors shape the market's future by anticipating Fed rate cuts, positioning themselves for Bitcoin's potential rise. Seizing this moment can create favorable outcomes in a volatile market. 2. Bitcoin's current market position and technical indicators. Bitcoin's current market position shows resilience despite recent dips. After testing support at $56,000, Bitcoin rebounded to around $58,765, indicating strong buy-side interest. This suggests that the asset may be gearing up for a rally, but the technical indicators also provide deeper insight into the next move. On-chain metrics are flashing bullish signals. The BTC long-to-short ratio, currently sitting at 1.07, shows that more traders are betting on price increases. This is a significant indicator because it demonstrates market sentiment, where traders expect Bitcoin to climb rather than fall. Additionally, exchange reserves continue to decline, meaning less Bitcoin is available for trading on exchanges. This reduces selling pressure and increases the likelihood of upward price movement. From a technical standpoint, Bitcoin's moving average convergence divergence, MACD, also presents a buy signal, as the MACD line crossed above the signal line, further indicating bullish momentum. If Bitcoin maintains this trajectory, we could see it retest the key resistance level at $60,000, a critical psychological barrier that could pave the way for further gains. Success is not final. Failure is not fatal. It is the courage to continue that counts. Winston Churchill. Bitcoin's resilience shows that temporary market dips aren't the end. Like Churchill's words, persistence and continued analysis of technical indicators will lead to eventual success in Bitcoin's journey. 3. Challenges and risks, spot ETF outflows, and volatility. While the broader outlook for Bitcoin appears bullish, challenges remain. One such concern is the outflow from Bitcoin spot ETFs. Recently, there was a mild outflow of $43.90 million, the first outflow in over a week. Although this represents a small portion of the total $49.34 billion in assets held by U.S. Bitcoin ETFs, it's a signal of potential short-term market instability. Volatility is another key risk factor. In the past, Bitcoin has shown dramatic swings, and it recently dropped from $60,000 to $58,500, which demonstrates the unpredictable nature of the crypto market. As Bitcoin approaches key resistance levels, traders need to remain cautious. A failure to break above $60,000 could lead to further corrections, pushing the price back to $53,000 or lower. However, volatility isn't always bad news. For experienced traders, it can present opportunities for profit. Short-term fluctuations could offer buying opportunities if Bitcoin dips before another major rally. But for investors looking for stability, it's essential to be aware of the risks tied to sudden market changes and ETF outflows that can impact liquidity. Life is 10% what happens to us and 90% how we react to it. Charles R. Swindoll. Market volatility is inevitable, but how traders respond to outflows and corrections defines their success. Staying calm and adaptive amid turbulence is crucial to profiting from Bitcoin's fluctuations. 4. Long-term projections. Will Bitcoin hit $70,000 again? Looking ahead, many experts remain bullish on Bitcoin's long-term prospects. Michael Saylor, CEO of MicroStrategy, is one of the most vocal Bitcoin advocates, predicting that Bitcoin could eventually rise to astronomical levels in the coming decades. His company continues to accumulate Bitcoin, which reinforces confidence among retail and institutional investors alike. But can Bitcoin realistically hit $70,000 again in the near term? The answer depends on several factors, including institutional adoption, macroeconomic conditions, and the outcome of the Fed's policy changes. The combination of institutional interest and favorable macroeconomic trends makes a strong case for Bitcoin's potential resurgence. If more institutional investors follow in the footsteps of companies like BlackRock and MicroStrategy, Bitcoin could experience another surge, possibly even surpassing its all-time high of $73,800. The greatest glory in living lies not in never falling, but in rising every time we fall. Nelson Mandela. Bitcoin may dip, but its long-term potential remains strong. Like Mandela's words, success lies in overcoming short-term challenges, with the possibility of surpassing $70,000 in the near future. As we close today's video, remember that the road to financial success in crypto isn't just about timing the market. It's about understanding the fundamental drivers, having patience, and embracing the values that the number givers gain pathway promotes: community, persistence, and emotional intelligence. Whether Bitcoin hits $70,000 soon or faces more volatility, staying informed and aligned with your long-term goals is the key to thriving in this fast-paced world.